I know you have also been reporting on Tom Lee, Wall Street strategist, and what he's looking at for 2019. He's pretty bullish.
He is. He now thinks that his current year-end target on the S&P 500, which was 2925, we're obviously above that now. He thinks that's too low. He thinks 3100 is more plausible, and that's largely because of the earnings recession being priced into the market. Now, he does point to a couple of risks that we should point out. One being if we do see an inversion of a different part of the yield curve, right, the 2s and 10s, or the 10s and 30s. That's something to keep in mind. The other risk is a policy mistake from the Fed. Those two things, the inversion of that other part of the yield curve and the Fed mistake, he thinks each could have a 20% impact on equities.
And what are we, thinking of those, the chances of that happening, I guess, from where you sit and what you cover?
Yeah, well, absolutely. I think that when we talk about the yield curve inversion and the Fed, those are inextricably tied together. I mean, the Fed does have some control over where the short-term rates are just by sheer virtue of where they set the benchmark rates. Again, we will have the FOMC meeting next Wednesday, but the longer end of the curve, which is supposed to be, the market kind of pricing in what their expectations are in the long term, are also basically in line with whatever the Fed is doing in the short term. If the Fed derails us or makes a policy mistake in the short term, that means that in the long term, that could affect the outlook as well. So I think that when we talk about the yield curve flattening, there are policymakers. Jim Bullard, the president of the St. Louis Fed, I talked to him last week. He said that the Fed needs to be mindful that they do not invert the yield curve. He didn't say that the market will see an inverted yield curve, that the Fed doesn't cause the yield curve to invert.
And look at that 10-year anchored at 2.5, pretty incredible.